It's good to be back again. Last week I talked about the dollar yen and was looking for the greenback to weaken further. And today I am going to discuss the euro dollar. As you can see that the euro has continued its medium-term uptrend, which started in January this year and hit a 23-month high yesterday at Asian opening at 116.84. And from that, we saw a bit of profit taking in European session as well as New York morning. But since then, euro has regained traction and rebounded in Asia. So looking at the daily chart, you can see that the price is trading well above the 13-day and 55-day moving averages. So that means the trend is still your friend on the euro. So this week I see two upside risks facing the euro. First of all, it will be the Wednesday's FOMC policy meeting. Although the market widely expects the Fed to stand pat on its rate decision. However, I would add a tone of caution here, especially if the accompanying statement contains any hawkish tone. If it does, then we will see a bit of correction on the euro. And then after Wednesday, we have important US data on Friday. We have the first reading of the GDP as well as the PCE. So if both data come in slightly higher than market expectation, that would trigger profit taking on the euro. So these are the two risks the euro bulls need to look at. Otherwise, the trend is your friend, and buying the euro on dips would be my recommendation. The first target would be 2015 high made in August at 117.15, and then later 118.30. So I think that if we buy on pullback towards 116.30 with a stop loss below the previous high at 115.84, that would be my recommendation. Let us look at the medium-term picture on the euro, which is looking pretty interesting. Before we discuss the technical, let us just quickly go through the fundamentals. Last Thursday, ECB Draghi mentioned that the policymakers will discuss QE in autumn. So we have ECB policy meeting in September and October. So it looks like that the technical up move on the euro will continue next month until we hear it from the horse's mouth. So from the technical perspective, you can see that after almost 14 years of decline, the euro hit a major bottom at 103.41 early this year at 103.41. That was a near 14-year bottom. And for those who remember, the euro made a record high after the Lehman Brothers crash in 2008. And that high was 160.40. So if we can close above the 2015 high at 117.15, then this means the entire downtrend has made a low at 103.41, and then the euro should retrace this move. So it looks like that we can go to the psychological 120 pretty easily once we close above 117.15. And the minimum 38.2% retracement of the entire downtrend is 125.18. So that means psychologically we have 120, which is the next target, and after that 125. Probably we won't see that anytime soon, but for those long-term euro bulls, this is something you should aim for. So once again, recommendation is to buy the euro on dips, and I've don't think one should be too anxious to chase the euro. So I would recommend buying the euro on pullback towards yesterday's low around 116.30, and on the downside, if we close below 115.80, then this means that we have hit a temporary top. Then the euro may go down to 113 max before the uptrend resumes. So this is my take on the medium-term outlook on the euro. Thank you.